Thermax is the next company in focus that reported its quarterly numbers. Revenues were down for a second consecutive quarter, dragged by weakness in the industrial infrastructure segment. Ashish Bhandari, Managing Director and CEO at Thermax, joins in right now to talk about the numbers and the outlook ahead. Ashish calls a spade, and Ashish, I would love to know if the numbers that have come out for H1 as well as for Q2 are a bit more subdued than what you had penciled in, because I remember you told us 2 quarters back that don't expect magic in the near term. Now my question is this as per what you anticipated, or is this slightly tougher than an environment than what you had penciled in?
Neeraj, a very good morning to you and to all the viewers. I would say the numbers were actually better than what I expected. And I would like to share what's working well and what is one area that we can continue to improve on. First, if you just take the numbers and focus first on the orders side. I'll take that because that's what makes our backlog and shows what we can do in the future. Within the orders, you would see that our domestic order book for the first half of the year is up more than 20%, almost 25%. Last year, we had one very big international order that was 1,000 crores. And this year, we are tracking to that number, despite not having that 1,000 crore kind of a backfill. The second part is that last year, our Q3 and Q4 were weak, and not just weak, were much weaker than even our traditional run rate, because we were doing two things here. One, there were very specific kind of orders that we did not want to take. So that opportunity pipeline went away. And two, the market overall was slightly soft. This year, as we get into Q3 and Q4, we are bullish and maybe even slightly more than bullish, and confident enough to share that year on year, we will grow more than 20% on our order book. And then if you see in industrial products, which is the most profitable part of Thermax, this quarter we grew in high teens, and that growth rate we expect to continue for the rest of the year as well. So two things going on: mix improving, overall outlook lot more bullish on. Then if I take revenues, and then I'll come to PBT next. Revenues is largely driven by kind of our backlog not being as strong coming into this year, which is now changing. Our backlog is now getting stronger and stronger. And two, this particular year, even more so than last year, many of our customers had trouble at their project sites where they could not pick up material and inventory because the monsoons played havoc all across the country. A lot of that is in the rear view mirror. We are seeing good strength on execution now, and on revenue in Q3 and Q4, we'll see good pickup, which will then show up in good profitability as well. The one area that we continue to have to improve on is how we execute large multi-year projects, especially those that relate to work that we do for government. And that for the last 2 years has come down to a complete zero for us. But our backlog of what we have taken in the past is continuing to cause us pain. And that pain we are working through. Yeah, it's caused by...
What is Ms. Bhandari, what is the time span of this pain continuing? You started your answer in a very interesting manner, saying you actually expected worse. So I want to ask you why. And when you're saying that you're seeing the impact of decisions taken in the past, or reasons in the past that continues with pain, till how long?
So we've got, and by the way, in this year's investor book, we are starting to share the backlog of these orders and then giving a sense of the timing by which this will get cleared. By the end of this year, a good chunk would be cleared, and by kind of third quarter, so a year from now, the rest of it will get cleared as well. But with each quarter, that pain is getting lesser and lesser. That said, this particular quarter, we had one specific surprise in relating to such a project where we have shown a negative cost impact of 43 crores, which is relating to one such project, which we had taken in calendar year 22. So we have been working through that. Where I say my numbers are better than expected is not actually on the profitability line, because this portion was indeed a surprise, was on the order book. Yeah, on the order book, I expected the recovery to show up in Q3 and Q4. It's starting to show up in Q2
Sure.
already.
I'm just going to press in on that profitability number, if I can. The profitability and the margin number, when you say that it was a bit of a surprise, what are the factors that you think will then be reversed in second half? Because you are obviously more optimistic on the second half.
See, we always have, and last year's Q4 is a good example where we hit 3,000 crores and what it did to our profitability. And where our backlog is right now, we expect to do that Q3 and Q4 both. Yeah, our backlog now is such that we should be able to cross 3,000 crores consistently for a couple of quarters. And that should then result in the profitability. We don't expect any major negative surprises of the kind that we had in Q2. All large projects we have at least accounted for reasonably well. In our bio-CNG projects, we still carry a little bit of risk where Q4 is important, but the magnitude of that is potentially very small. And the new products and the new projects that we are undertaking, they're all in what I call as the green zone and the good zone, so to say.
So, a couple of questions, and good morning to you, sir. Alex here. I'm just asking about the margin impact on account of cost overruns in the industrial infra business and the chemical segment. Is this likely to continue in the second half? And two, you've pointed out that some of these legacy projects will end in FY26, heading to the third quarter, as I understand, of next year. So I'm just understanding what you expect the margin profile to be in FY27. Will it be materially higher than what we're seeing right now?
Yeah, I think it will be higher. We are, and you can see, yeah, we've been industrial products, we've been consistently sharing margin profile. We've been living up to that margin profile. Industrial products, also, industrial infra also. There's one, and because TBWES, which is a sub part of industrial infra, it's publicly, we're sharing the financials of that segment separately as well. That portion has also crossed 10% profitability. We just have these overhang of projects which are at 0%. And with this particular quarter, one particular project at negative profitability. As we clear this backlog, I do expect our profitability profile overall to improve. Chemicals, because you asked a question specifically, chemicals we are priming for growth. Yeah, we have added significant capacity. We have entered newer areas. And today we are carrying about 15 crores of base cost a quarter, which is just capability that we have added for growing. And that growth, we need to show it happen. I've been talking about it for some time.
Right.
But you will see it coming through in Q3. Yes, Q3, Q4, you will see chemicals coming back. Not coming back, starting to show growth in a meaningful manner.
Mr. Bhandari, forgive me for interrupting, and it's horrible on my part, but I do want to push you to give me a bit of a range for the margin. So if it's at 7% in the quarter gone by, and you're anticipating that at the end of the financial year, you will get rid of some of those legacy low margin products, FY27, what is the kind of range that you would anticipate for EBITDA margins?
Look, we crossed, last year we crossed 8% overall as a year, even though we had quite a bit of hits on a couple of products, with very easily, I think, crossing 9% and even getting into near visibility of 10% or even crossing that is definitely an expectation internally, and we need to show that externally in our numbers as well.
Okay. Thank you so much, Mr. Bhandari, for taking the time and speaking to us. Pleasure speaking with you, and wish you all the best for the second half of the year.
Yes.
Interesting primary market action right now. You have two simultaneous events taking place. One